You're looking at a daily chart of the NASDAQ. Thank you for watching my daily review. At the beginning of the week, I had told everyone to fasten their seatbelts because I expected a volatile week, and it certainly has been. I believe Mr. Powell got his desired results from his hawk talk on Capitol Hill this week. You can see that the NASDAQ was down 238 points today, or 2.05%. The volume was lighter than yesterday, so no distribution day. That ought to make you feel better. And also, you can see the 50 is about ready to cross through the 200. So we'll get our golden cross. That should fix everything, right? No, seriously, what we really have here is just a 15% move and then a give back, a 50% retracement. And here we are back again where we were last week, a little bit below the 200. Where it had a nice couple days snapback, and then just kind of drifted right back to where we were last week, and just a tick above the 50. So, yeah, 0.6% below the 200, and just a tick above the 50. So, anyway, not much to say. There was just selling across the board, caution ahead of the non-farm payrolls, and everybody's worried about rates. Interest rates. But if you look at the weekly, you can see after this big move in January, it topped at on February 2nd or February 3rd. I think it was the 2nd, and at 12,269. And it's just gone down one week, up a week, down a week, up a week, down a week. And it's just kind of digesting that 15% gain. And I don't see anything more sinister than that right now. Just digesting gains, and you got to expect some give back when you have a move like that. The NASDAQ's not going to go up 15% every month. So anyway, that was the NASDAQ on the daily and the weekly, and this is the S&P, pretty much the same thing. We're back here where we were last week, testing support. So we'll see if we get support, if the shorts can, push it lower. Right now it's closed at 39.18. Maybe they can push it down to 38, or who knows, even lower. We'll just have to wait and see. We cannot control the data, the inflation data. We cannot control what the Fed says. We cannot control the market's reaction to any data. We can just control our own discipline and our risk management, and be purchasing quality stocks at proper buy points. But I'm going to take a look at some of the stocks. When the market's down like this, that Apple's going to be down, and it certainly was. Microsoft was up most of the day, and then market weakness, it gave in overall, was down only 0.5%, not bad. Tesla was having a really bad day, ended up 5% down. That's not too good. 172 now, and even down more in after hours, of course, because everybody's selling because they're so negative. And Nvidia, this stock to me, it's still above its 10 EMA right there. It looks totally different than Tesla, which is below. See, it could never get above its 200. Now it pulls back here a little bit, but it had 100% gain, Tesla, and Nvidia is the stronger stock here, as it's still closed above its 10 EMA. Anyway, let's take a look at some of these semiconductors. Nvidia certainly is one of the strong ones. This is ACLS, semiconductor equipment stock, made a new high. Pull back, still closed, 1% above its 10 EMA, had this bearish engulfing candle. Yikes. Oh my. The low is 129. Yeah, nope, didn't make a bearish engulfing candle, did it? Nope, not quite. Anyway, it looks pretty ominous there. ALGM, maybe that's what I'm thinking of. Yes, that's the bearish engulfing candle. Makes a new high in the morning. They suck all the bulls in, it was all bulled up and buying, and then all of a sudden, boom, rug pull, and it snaps back. But this one still, it made a new high and it pulled back. It's 1% above its 10 EMA and trending higher. So I wouldn't get too bearish with stocks above their 10 EMA. It's not ideal that they pull back like that, and if you're looking to get in, if you missed it and you're looking to get in, you gotta wait for the bounce here. This is LSCC. Another one, 1.6% above its 10 EMA, made another high today, and then just pulled back with the market weakness. And we saw that, all across the board. But if you're holding SIVB, you really had a bad day, down 60% in a session. that's pretty rough. I guess a client pulled out, and it's down a little more after hours, of course. But that spooked all the banks, and so Wells Fargo, if you own Wells Fargo, you had a really bad day today. Down 6%. That's a big move for a bank like that. Bank of America as well. Just a lot of negativity, and when a big fund pulls out like that in Silicon Valley Bank is, they speculate, and they're a venture, capital, and they speculate, and they got caught, just speculating a little too much. And that's the way it goes in banking. The free money days are gone. And so these banks are going to have a little bit of a tough time here, especially with all these scared investors. And I don't invest in Goldman Sachs. It was down 2%. Sliced its 50, and Morgan Stanley, same thing, sliced its 50 with volume. So the banks really led to the downside, but everything was down, like I said, across the board. The retail stocks, CROX, came down to its 50 today, and people want to get in, you want to buy this, but they had earnings. And they were trading, I don't know, about 122, 125 before earnings, and it spiked to 143. And now it's down lower than when they provided spectacular earnings and raised forward guidance. So it's like, the market's telling you that earnings don't matter anymore, that the only thing that matters is higher rates. And we know that's not the case. Yes, rates are going to go higher, but earnings still matter. CrowdStrike was the same thing. They reported strong earnings. It spiked up. Now it's down below before where it reported strong earnings and raised guidance. So the market's kind of, and ABMB is the same thing. They issued a good report. Now it's trading below, the day that they reported earnings. That went up to 144 too. It looks a little better than CROX because it's above its 50, but still, the market's trying to tell you that the rates are the only thing that matter and the earnings don't matter right now. I mean, that could change in a minute on the stock market. But anyway, I want to take a look at some of the other retail stocks. Here's ELF back down to the 21. It found support there last time. We'll see if it can find support this time. Here's ULTA. They reported tonight. Strong report. It's down a little bit. I don't know. I mean, I don't know what you have to do. Beat and raise, and significant beat, significant raise. But, we'll see. The stock's had a nice run for a long time, so maybe it'll pull back and give people a chance. Wingstop is another one that I like. It's trading tight right in here, not really affected too much today, down less than 1%. There seems to me like the restaurant consumer is pretty strong. Dick's, Ray reported yesterday or the day before, earlier this week. You can see it gapped higher, made a new high today and pulled back here below 150, but still strong stock. The consumer is strong. BJ's, outstanding report. Looked like it was going to have a heck of a day, and then it just got dragged down by market weakness. Still up 2.35% with heavy volume, but the general market weakness dragged that down. But the consumer and the retail companies are reporting good earnings. They're just not being rewarded much by this market. It's just focused on interest rates. SMCI, this I'm just going through some stocks, from MC stock charts that we have that made new highs here today, 104.30, and pulled back a general market weakness. Still closed 0.5% above its 10 EMA. That looks like a watch list stock for tomorrow. Arista Network, this was on our watch list, blasted higher. Made a new high today, 152.07, just pulled back with the general market weakness. Still a strong stock. TMDX, another one, gapped higher in earnings, pulled back, made a new high today and just pulled back on general market weakness. Well, down 6% in this session, bearish engulfing candle. The world's coming to an end. This one is richly valued, but still a strong stock. Speaking of strong stocks, First Solar, the leading solar stock here made a new high today. This one's still 6% above its 10 EMA. So this one does need to cool off a little bit. You can see it came down in lighter volume today, but that one broke out of a base and is it does need to come in a little bit. That thing's running hot. Anyway, that's all I have for today. Tomorrow, the new data comes in, and like I say, we don't have any control over the data or the reaction to the data. We only can control our discipline, So we remain disciplined and execute properly, and things will work out for us, and we never give up.